and welcome to FinextraTV. I'm Hannah Wallace and we're here at Cybos 2019 in London. Kindly joining me now in our studio is Amit Bhute, Senior Vice President and Head of Banking and Financial Services Practice at Virtusa. Hello Amit, thank you very much for joining us.
Thank you for having me.
To start off though, could you tell us why has this become such a big focus for banks and financial services?
Currently the financial services are under tremendous cost pressures. You know that they need to have ever-increasing volumes of data, ever-increasing volume of transactions. Even payments is increasing at the rate of about 10 to 12% every year on year, which means that even if they don't do anything, their cost of operations just keep on increasing. Plus, they have to invest in a lot of technology changes which is there. Artificial intelligence, massive amounts of data churning which is happening, regulatory initiatives which is there. All of this is putting cost pressure on the banks. And if they want to invest on digital technologies, they do not have unlimited budgets as well. The margins, interest rates are low, capital banking is under a lot of pressure as such. So that's the reason why they have to figure out a way of taking out costs from the existing IT and operations and investing them into digital transformation initiatives. That's one of the reasons the banks are so much under pressure on cost optimization.
Fantastic. All right, well, following up from that quite nicely then, what technologies are you seeing being leveraged to the short, medium and long term to ensure sustainable growth?
On top of the mind, I think cloud has become the biggest purveyor of technology changes. Many organizations are moving towards cloud. The retailers were the first to move on to the cloud platform. But in the latest survey which we did, banks responded that about 84% of them have some kind of cloud transformation strategy in place. Cloud becomes very easy way. Many of the non-critical applications are already moving to cloud with critical applications following suite. And one of the reasons that's happening is as soon as you move to cloud, you immediately get the benefit in terms of IT infrastructure cost reduction. The next which we have also found is actually slightly not exactly related to cost takeout, but more on risk optimization. So if you look at AI, artificial intelligence and machine learning, a lot of organizations have been using that also to cut cost. There are two primary areas of focus for AI and machine learning. One is risk mitigation side. So that is better fraud risk, better AML compliance, etc. The second is also on both use of biometrics, conversational commerce, as well as chatbots. So that becomes interaction very easy. That's another way of cutting cost. The third one which we've seen and still rising, specifically in the area of trade finance, is blockchain. So there's a lot of debate on blockchain for the last 2-3 years. We have identified a couple of areas or 3-4 areas where we are seeing a lot more traction around blockchain now. So people have moved to cross-border payments is definitely there, Ripple being there for a long time now. Trade finance is picking up, so there's been a lot of POCs and a lot of actual live implementations of trade finance on blockchain. And the third is also ID, KYC, ID, that becomes a very strong source of for initiative for blockchain as well. I think about 54% of our banking clients said that they are actually doing some kind of initiative on blockchain today.
I see, all right, and I'm sure we're going to be seeing some examples at this year's Cybos, but for now, could you just share some examples of where banks are implementing this technology and some of the benefits they're reaping?
Benefits are very simple. The benefits are either faster onboarding times or the reduced cost of operations. We've seen one of our FI clients, for example, implemented artificial and machine learning for actually doing a lot of false positive reductions in the AML operations. That helped them to cut costs to 30 to 50%. Another of the clients actually used it from a seamless customer onboarding perspective. They invested in a digital engagement panel, invested in artificial intelligence and machine learning, and that cut the cost of onboarding by about 30 to 40% as well. So rather than actually onboarding in 7 days, they've started reducing onboarding in a couple of days for large corporate banks and corporate transactions. So that's one of the uses which we've seen. From a cloud perspective, what I've seen is investment cloud is a little bit longer term duration. One of my colleagues is already going to be talking about it at Cybos this week, about cloud transformation in capital markets and transaction banking size. But what you've seen is the pace of adoption is a little bit slowed because of the regulatory pressures, because of decision making about hybrid versus private cloud versus public cloud, which is there. So we haven't seen that much savings yet, but what we've seen is slightly 20-30% year-on-year reduction has started happening, especially in the infrastructure cost.
Well, Amit, thank you so much for sharing your insights. I'll let you get back to the event. It's been a pleasure. Thank you.
Thank you very much. Thanks a lot.